Hello everybody, this is a nice example how a rule-based discretionary trader can apply discretion when trading charts and patterns within a trend. Now I've specialized on visual pattern recognition, and let's have a look at the four chart layout here. We're looking at the Dow Jones future to 40-minute, daily, weekly and monthly. And it's always important, the pattern is here on this lower time frame, the 4-hour chart. It's always important to look at it and ask the question, what story does the chart tell? Because we really want to see a story in order to understand whether there's an edge in the market and whether we want to take a pattern. Now let's start from a higher time. Let's even go to one time frame higher. Let's go to the quarterly chart of the Dow Jones. And what does the chart tell? Well, it tells we're in a strong uptrend. That's a very strong and very smooth uptrend. Well, there have been some strong corrections. That was the Corona spike low in March 2020. We've got another strong correction that comes down really close to the 21 moving average. Well, that basically was started by the start of the Ukraine war, and it seems like, well, the war might be over because we are back into an uptrend again, right? Leaving this consolidation. Now on the monthly chart, that looks very bullish too. What we see is that price has bounced off the 21 repeatedly, even here in the past, many years ago, bounced off 21. Even this has tested the 21 and bounced off, testing 21 and bouncing off. Even here, these last 6 months have bounced off the 21 and now resuming the overall uptrend, still nicely uptrending. So another great point. Now on the weekly chart, well, we're in a longer consolidation, and that's an S1 gecko pattern. It's not that easy to see, but this is the base. We've got multiple touches on the base, and it basically took a long time to actually show a little bit of more strength, right? Well, we've got a higher low, we've got a higher low. It actually plotted another S1 pattern. So this is an S1 within an overall S1, and just recently, so these are all bullish, bullish items to note. Just recently, like the last couple of weeks, well, we've got two green bars and they have broken above this resistance line. We can see it back here. We had a lot of touches from above and below. This is resistance, and that week clearly closed above. Now, what is that? Such a bar? Well, that's a momentum move in a lower time frame. On the daily chart, we can see this one bar created this nice momentum move, or on the 240-minute, well, this is the momentum move. And this one red bar is a consolidation. We can see it here, but it's actually, in terms of thinking about System 1 and Gecko, well, it's a consolidation. It's a full-grown and mature consolidation in the 240-minute chart of the YM. And what we need is a test bar, an excitable price action event to the downside. Well, we had one here. We've got another one here. So this is an entry opportunity now. Well, knowing that we are still here, stuck in a range, right? We have not broken yet to a new high. So this has a bit of a lower win rate. Now, as a rule-based discretionary trader, what is the discretion? Well, we can take the trade right here with a relatively tight stop, or we can wait for this first test bar high to be broken, which gives a little bit more confirmation, right, for the bulls. But knowing that we are still a bit stuck in a range, we basically need to break above this wick here, bottom left. So this tells me that I should rather wait a little bit, right, and go with a little bit larger stop in order to have a bigger chance to make this a winning trade. Why to get in a bit later? Well, I don't mind at all, because these gray lines, well, these are stop run levels. All those exposed lows that have a wick, these are stop run levels. And should price actually break to a new high here, this consolidation high, if that is taken out, well, then we at the same time we're running over this stop run level that should produce bullish momentum. The next ones are close here. So this can easily develop into a swing trade that goes well beyond the target that comes out of the pattern. We could easily break to a new high and make this a big R multiple. Just if you compare this risk, right, with breaking to a new high here, well, that is a huge opportunity, and a huge our multiple could develop out of that. So I don't want to get stopped out too early, and I'm choosing here the little bit more conservative entry. Thank you.